guys. I'm Brent Rasmussen, and welcome back to Mortgage Matters in Minutes. I'm your host, as always, and this week we are going to talk about the difference between gross income and net income and how this plans into a budget and then how it actually carries over into the mortgage arena and getting qualified. Because a lot of times people will contact us and say, hey, as a mortgage lender, do you look at our gross income, our net income, my commission, line on my taxes, my adjusted gross income? There's a lot of different lines. So we're going to answer all those questions and solve for those here today. So let's first talk about the simplest of all, which is our gross income. Gross income would be if you are a W-2 employee and you receive a salary of, say, $60,000 a year. Okay. You don't really bring home $60,000 because that $60,000 is what you make as income, but the government and the state takes out taxes and Social Security and maybe other health insurance deductions and things like that. So your net income is your income that you use for your budgeting purposes, because your net income is the income you actually receive after your taxes and deductions are taken out in your pay stubs. The reason why we bring this up, and it's so important, because when consumers apply for a mortgage, they generally always use their net income because that's how they base their budget off of. But for the mortgage arena, believe it or not, all of our calculations are based upon our gross income. And we'll talk more about that here. But let's first now understand, for example, if you make $5,000 a month gross income, which is $60,000, you might take home a net income of $4,000. Every person out there is going to have a little bit different scenario because it depends on what state you're in, how you file your taxes, what it looks like with withholdings, with how many children you possibly have, so on and so forth. So there's lots of different net incomes for every single person, and every person's income is going to be a little bit different. It's not all going to be the same. Not everybody just goes to work and gets paid hourly or salary or works full time. They might have multiple jobs going on. The biggest thing that you can do as a mistake, though, is make your budget off of gross income. And we see that a lot with higher end wage earners, that a doctor or a lawyer or high executive says, I make $1 million. Well, they'll try to spend $1 million a year. Well, that's not going to work for you to not have additional credit card debt or other kinds of debt, because you don't actually take home $1 million. You might take home 600,000 or 700,000 or 500,000, depending on your situation. So now that we kind of understand here a little bit about gross versus net, how do we want to look at our budgeting? And our budgeting is going to come down to net income. What do we bring home? What are our expenses? Let's look at all those expenses, because your house payment is going to be based upon your net income when you live every day from paycheck to paycheck, from month to month. You want to look at additional savings for retirement, savings for vacation, paying your groceries, your gas, your health insurance, your utilities, and then obviously your rent, your mortgage, all the above. So a budget is going to be set on your net income. And that's why I understand why so many clients, when they contact us, are looking at their net income, really not their gross income. Our formulas still factor in to make that affordable for you. And if you want to check more of that out, you can watch one of our debt to income ratio videos, which explains exactly what the rules are that mortgage lenders look for in regards to those types of formulas. So lastly, let's talk about mortgage implications with gross and net income. And that's where sometimes it can be challenging. We, like I mentioned before, as mortgage professionals, mortgage lenders, we use gross income to qualify. So if you're a standard hourly or salary, that's very easy. Where it gets challenging is individuals, like I mentioned before, that might have 2 or 3 businesses or 2 or 3 side jobs on top of salary. And when we think of the word gross income as a business, you might think of that as sales, how much income you brought in. But for being self-employed or any type of rental properties that you have in the mortgage arena, we're going to look at the money after you wrote off your expenses. And a lot of individuals call and say, okay, my AGI is this. Well, AGI could be one source of income, 10 sources of income. We are going to look at each individual income source separately. And there's a specific rules, there's specific formulas for whether it's bonus or overtime or commission or self-employed. or a Schedule C income versus Schedule E income, or corporate taxes versus, individual taxes. So there's lots of variables there. So the biggest point, besides understanding the bottom line on being self-employed, is get with a mortgage professional early if you have multiple sources of income. Because we understand that what you show possibly on your tax return isn't what you truly make. But unfortunately, the mortgage rules have been changed a lot since what happened in 2008 to get rid of stated income, no documentation loans, because the government felt that those loans did not perform as well as a full documentation loan. What is a full documentation loan? That is one that we document all of your income and we calculate all debt to income ratios and formulas to get you qualified. I hope you learned a little bit today, but if this is still confusing, we completely understand because every individual out there has different sources of income. And we would love to chat with you and answer any of those questions to go through, okay, here's what your income looks like, how you can set your budgets, or what you might qualify for a mortgage. I'm Brent Rasmussen, owner and mortgage specialist. Look forward to seeing you guys each and every week. Please subscribe, hit that button below, check us out, and we'll see you here next time and next week. Have a great one. Mortgage specialists. Driven, trusted, reliable.